During this time of dumps in both tech stocks and crypto, commodities have been the right investment vehicle. No one has missed the bull run in gold, for example. A couple of years ago, the real Coops and I created, I think, 10 videos about uranium, which turned out very useful. Then uranium went into a massive bull run to 110 and then pulled back to about 60. So the question is now, Mark, what's next?
Thank you, CTO. Yeah, let's dive into uranium. I think first we need to look into the macro picture, and subsequently we can look into some details to get a very clear perspective of where we stand. In 2020, we indicated that there was a very bullish case for uranium, and the bullish case was that it was extremely hated. Now, in commodities, you're either a contrarian or you will be taken advantage of.
Yeah, I remember when we made the first videos, no one was interested really.
Exactly. Many people wonder if the price will go lower or not, and nobody expects, given Fukushima, that there will be an interest in uranium.
Yeah.
But then at the same time, uranium is providing at least 20% baseload power in the US and is also providing significant baseload power in almost all other countries in the world, aside from coal. If the price of uranium is below the cost of production, one of two things are going to happen. Either the price is not going up and uranium is not going to be mined, and as a result, all the nuclear power plants will stop working and there won't be baseload power, or the alternative, which is baseload power will continue to exist on the basis of uranium, and so the uranium price will go up. And that was the thesis in 2020. And since then, we have seen a tremendous bull run in uranium, where the price overshot the incentive price, which is around $65 to $70 to create new mines and to explore for new mines. And it shot past $100 to close to $110. In the meantime, as a result of that, we also have seen more and more support for uranium in the market. We've seen in Japan, in China, in India, in Western Europe. China is opening a tremendous amount of nuclear power plants. We see the same, and constructing a tremendous amount as well. And we see the same in India, and we see the same in Europe, except for countries like Germany. We also see that there is strong support from the green parties worldwide because of the lack of CO2 emissions in case of uranium power plants. And finally, we also see a large number of nuclear restarts happening. Situations where decommissioned reactors are being put back online, like 3 Mile Island, as a result of the huge demands which AI has as it relates to power. Now, typical power plants have 12 to 24 months of uranium supply as a reserve. In Japan, this is significantly higher. This is typically 5 years. This is very important to realize for the uranium bull run, because that supply after Fukushima hit the market. And as a result of that hitting the market, the prices for uranium were tremendously depressed. But now, about 14 out of 28 reactors in Japan have returned to operation. They are not yet procuring much new uranium, but that obviously is going to happen shortly. And shortly needs to be seen in months and years, not in the terms of days, obviously. And furthermore, we see that a lot of the utilities, as the uranium price over the last year has come down quite a bit from its high of 110 to now about $60, $65, have not done any replacement rate contracting. And so that demand pool is about to come in as well. But please be aware that only about 20% of the demand pool happens in the spot market. Now, at the same time, it is very clear that uranium production is facing many challenges. Companies like Cameco and Kazatomprom and almost all other uranium producers are facing challenges and have been unable to increase their production up to the level which they forecasted as part of their quarterly and yearly forecasts.
Will you explain the term market and the spot market?
Yes, I'll explain that shortly, CTO.
Thank you.
And the reason is that understanding the difference between the term and the spot market will ultimately drive, in my perspective, the successful or unsuccessful investments in uranium for the next couple of years to come. But let's first step back as it relates to the uranium production. So even companies like Paladin indicated also significant issues recently due to rainfall and have downgraded their production guidance for this year. And in the midst of all of this, in 2020 or 21, the Sprott physical uranium trust was started, which has bought a significant number of uranium pounds in the market, I think about 65 million pounds. And these pounds will not come back onto the market. And so they have basically gone to supply heaven. Now, obviously, everybody here will then say this is fantastic news, but why is the price going down to $65? How come the price hasn't gone up? And how come we see many uranium companies currently being quite depressed at a low point in the chart? Tariff situation, which we see in the US, is going to have massive impacts. The US currently produces about 1 million pounds of uranium within the US itself. And the rest is being imported from Canada and other countries to the tune of about 48 million pounds. And so we'll see what the impact is of the tariffs which Trump is issuing as we speak. However, I don't believe that that is crucial as it relates to the uranium investment thesis. And as we discussed shortly before CTO, this comes back to the term and the spot market. Now, what is the term market and what is the spot market? The term market is the market where producers and utilities transact in uranium, but not on the basis of a spot price, but on the basis of long-term contracts. In other words, utilities need to have certainty of supply for a period of 5 or 10 years. They don't want to contract every couple of months or every couple of years to increase their supply back to baseline levels. After all, a nuclear power plant, you don't want to shut it down because you have a shortage of uranium or you have other challenges as it relates to transport, production, you name it, which impact your ability to generate baseload power. And as you can see from the Cameco uranium price chart, while the spot price has retreated significantly down to $65, the term price has gone up and has now moved sideways at $80 US per pound of uranium. Now, why is this important? Obviously, it depends on the type of investor which you are. Are you an investor? Are you a speculator? If you like to invest for beta, you can invest in the best of the best. The Camecos, the Kazatomproms of this world, and even in the Sprott Uranium Trust. However, if you choose to invest on the basis of solid companies which have significant uranium in the ground and want to build a mine or complete the construction of a mine, in all other commodities but uranium, you only have the spot market. And so these companies need to get financing, maybe taken over, they may need to issue shares, dilute shareholders, to be able to develop that deposit. In a commodity with a term market, and uranium is the only commodity which has a term market, these companies can sign offtake agreements with utilities in term contracts, and then go to the bank to get a loan against these multi-year offtake agreements to develop their mine and to produce the uranium. And so the current investment thesis for uranium is not that the spot price for uranium has come down to $65. In fact, it may go even lower in case of a recession or the current stock market downturn. But the point is that the transactions are being done in the term market and that these companies, which I just referred to, are able to finance their own mine build, finance their own uranium production, and go to market. And that creates value, and that will be reflected in their share price. Now, let us also be clear in terms of the investment horizon. If you want to invest over a long weekend, this is not the investment to make. But if you have a longer term horizon and are willing to invest in companies which are building mines, and again, that process can take multi-years, then very clearly you are investing in companies which over that time frame are going to create significant wealth. Finally, I also believe that in terms of the spot price, we are at the bottom, if not close to the bottom. And that doesn't mean that the spot price can't go a little bit lower if there's a market washout. But the point is this: the carry trade, which is currently taking place, drives the spot price of uranium higher. Companies like Kazatomprom and Cameco are buying uranium cheaply in the spot market, for example, from the Japanese inventory at a 3.5%, and they sell this as part of their term contracts, and as a result of that, the spot price is moving up towards the term price. A couple of years from now, they obviously have to return that uranium back to the nuclear utilities in Japan. But that means, again, that essentially we have reached the floor under the uranium price, and likely from here uranium price is going to move up. As a result, most uranium companies, which are priced based on the spot market, are moving up. But most importantly, those uranium companies which are building mines or are in the preparation phase to build a mine and are able to contract based on the term price with utilities will now have the ability to sign long-term agreements with banks for the financing of their mines, and that should drive significant value.
Oh, very interesting. As you all know, Mark is the only person I listen to when it comes to commodities in general, and of course including uranium. And as you recall from earlier video, Mark is managing one of the pro portfolios for commodities. Of course, this is very interesting, very exciting news, and I'm going to take some positions here. I know that you all want to hear my update on Bitcoin also, and the truth is that there's not that much to say about Bitcoin in itself. You know that, guys, because Bitcoin just follows stocks. Stock market down, Bitcoin down, stock market up, Bitcoin up, stocks down, Bitcoin down. And that is despite Saylor's gigabuy here on Monday. So I think that right now the chart to look at is this one. It's the US stock market. And so far it has actually bounced the second time at support. And today is a very important day in the markets because today is Trump's tariff days. And I think everyone's just kind of waiting to see what will happen today. Could that be a big turn in the market, either consolidating this bounce or becoming the breakdown? And also for tech stocks, I think there's quite little point analyzing individual stocks until today has passed. The real diversification to both the tech stocks and crypto is commodities like gold, like uranium. It's worth the effort, guys. Thank you, Tack. CTO Larsson out.